tried to do it, and the first time I actually did the whole recording, but it was never streaming. So we should be live now. I'm just waiting for confirmation here from YouTube. Good. I can see that we are live. So guys, thanks so much for joining me. And we're trying things via YouTube now. Most of you guys are very well familiar with this. As you know, we've been doing this for a good amount of years when I was with other firms. So we're going to try it now with ATFX. Now, the ATFX London morning update, or the London session outlook, is a webinar where we take a look at interesting markets and talk a bit about what's going on in the market to sort of prepare you guys for the day so you know which levels to look at. And why should you listen to me? Well, I've been trading since 2006 and I've been profitable for a good amount of years. And it's not often you see that online, actually. A lot of people doing webinars and seminars, they not actually profitable. I know that because I used to work for some big firms. So I can hopefully provide you with a bit of an edge and hopefully help you guys to be better at trading. Okay, we're gonna kick off with the euro, which is actually moving upwards, and it's all definitely to my surprise. You see, I'm long-term bearish on the euro USD because of a macro fundamental point of view. A break to 111.75 should potentially open up for further decline here, but we never had that, even though the ECB were dovish. So what's happening here is that the market is trading sideways within this range, and so the market is trading within that little range, and I think that we could potentially go upwards here, maybe to 114, as long as you trade above this low, really. And you know, we're to some extent still working with this head and shoulders. So you guys have head, left, and right shoulder. So break like that, and we're not going towards that target, really. We'll see if we go much higher. Now, something interesting today is actually another small head and shoulders in the S&P 500. So you have yourself a head here, as our left shoulder, right shoulder, and the head, and the break to the upside here opens up for maybe a move towards 29.17, which makes a lot of sense. However, though, I'm not like a big fan of these scalping setups, so my preference is really that work for that steeper pullback and going upwards. And the reason why I don't like that anymore is because it's quite intense when you're trading. It's a lot of setups throughout the day, scalping, trading short term, and you need to have sort of the mental agility and to deal with that stress. And I tried it for a few years. It's not really my cup of tea. So I'd rather trade less frequently and wait for that pullback. Something else that is also interesting is this one, and this is the dollar versus the Japanese yen. It's also head and shoulders, and yeah, left shoulder, right shoulder, and head. And I think the break here is to break that to that neckline, and the market could now potentially go upwards. As for the head and shoulders target, it's the difference between the head and the neckline, and I think we could potentially go up like that to something like the actual target itself is 114.10, but you have high here 113.69, which is probably a better sort of target to work with. As for the GBP versus the USD, there's not a lot of activity here, unfortunately. It's quite a boring market. We're still dealing with a bit of an uptrend. You have a low here, and this is the March 10th low. This is the February 14th low. So you can see we still have a bit of bullish momentum, and I still suspect traders are going to buy here. They bought here, we went up, and they bought here, and then we went up as well. But after that, it sort of got boring because we can't really trade much lower, and we can't really trade much higher. So the market is within that range, and eventually we'll have either bullish or a bearish breakout. As for gold prices, they're very interesting. Hopefully we'll have some sort of a trade set up over the next few days. So you got that left shoulder, then you have that right shoulder, and then you have that neckline going here. So it's a lot of head and shoulders in the market right now. But this one is better because it's a pattern that is quite old, actually. The market here created on January 7th. Can go to the ups. I mean, since January 7th, this pattern has been developing, and a break to 1280.81 should potentially cause this market to head lower. So that is really what I'm looking for. Until that happens, we're probably going to converge between these two levels, before really anything happens. As for crude oil prices, they're going upwards. You know, it's rather typical of an uptrend that the market just trends higher and higher and higher. And fib-wise, from the low to the high, the market, you know, I would prefer looking to buy here instead of buying up here. You might remember I said, let's buy here, and then I said, let's buy here. And we talked about buying here as well on those tips. So that was, those two were or those few setups were the really good ones. Up here at the highs, it's not the time to buy. These are my targets really. Now, there's other higher targets like 68. So we could have an extension of this uptrend easily. But to buy those, we need to have that risk reward ratio. So if we're looking to buy, for example, at the first fib, with a stop loss just at 59.77 and then target this high, then you're looking at two times the reward, two times the reward versus the risk. That's much better than buying up here. If you buy up here, you know, stop loss, and you're looking for something like this, your risk reward ratio here is going to be less than 1. Now, of course, you know, there's a bunch of setups, like short-term setups, like here, for example, you had that break here, and you could put a stop loss down here. So it could have gone up there, and you know, you would get some profit. For example, you could have had potential profit here of 1.67 times the reward. But again, it's not even great. 1.67, it's not great. Ideally 2 times or higher. And the problem here is that these lows, they're so fragile. You know, if Donald Trump says something or something else happens, these markets could easily go up or down. And that's why, again, working something with the 4-hour, identifying the big levels on the 4 hours, far more, I find that's far more reliable way of trading. In fact, it was when I went from short-term trading for a few years. Imagine that, from 2016 up to 2014. That's about 8 years. Sorry, 7 years, technically, where I was just doing short-term trading. Very, very, very difficult. It was first in 2014. Started to do slightly longer-term trading. Because I noticed that the short-term system I was using, it performed well when I had a signal on the daily. And so I said, okay, so if the short-term system is so dependent on what's going on in the daily and having a good trend on the daily, then why even trade the short-term? Let's just trade the daily setups. And again, less work, more money. Or in this case, more money and also being profitable. So before I was actually losing money. Now, German DAX, we didn't cover that. So this is the German DAX, and this is the daily chart. Massive head and shoulders going upwards. And we had the break here on April 2nd, and that's just that move to the upside. And so far it's looking good. We went up. The market did not revisit the breakout point, so I'm quite sure most people that bought here are very happy about that. What I would have done now is the stop loss, which was here, I would reduce that to entry, more or less. So the actual stop level would be pretty much around the low of this massive breakout on this day, which was the April 3rd low. So that means that if the market revisits the low, you'll have a tiny stop loss, if not break even. When the market goes higher, takes out this high, I will reduce the stop loss even further, putting it maybe something like at the 11,820 high, because that would reduce the risk further. And if it doesn't work out, you know, it doesn't really matter, because you already reduce your risk. And if it does work out, then you'll have here that very nice risk reward ratio trade of 4 times the money. As well, for people that are not involved, I think if we do take out the high, I think they're gonna buy a bit more. I'm not sure though if that would be the best sort of risk reward ratio trade on that. So buying the breakout, stop loss just goes below the low, and take profit is here. Risk reward ratio, yeah, it's 2 times the money, so it could potentially work, but not the best. And I think that's pretty much it. I think we covered all the markets. Yes, we covered dollar yen. So you have yourself a head and shoulders. Cover the euro dollar, which is going towards the head and shoulder target. GBP versus the USD, as well, moving upwards. And then you have gold here, which is also having a head and shoulder. So it's far more interesting setups now than just a few weeks ago. Okay, guys, do you have any questions? Let me know. First time we're live here on YouTube with ATFX. We're probably going to continue to do this for longer, for a few more times, or for a few months, I guess. Then we'll see if we make any changes or not. So if you like it, don't forget to support it. Don't forget to like the video. And also don't be afraid to ask questions. Okay, we're gonna wrap things up. If you do have questions during the day, reach out to me via AlexFX00. That's my Twitter. As well, you can email at alejandro.zambrano@atfx.com. We do have some special courses. We have coaching coming up for anyone that opens an account with ATFX. The benefit of opening with ATFX is that they have tight spreads, not only majors, but on the minors and a bunch of other assets. They have cryptocurrencies. And then again, you get this coaching. I used to do coaching as well, but it was, I think it was, the hourly rate was about 200 pounds an hour. Here you get that for free. And we're doing a premium course as well. The premium course is going to be priced around £1,000. But if you do open with ATFX, you can actually get it for free. As you know, you can already check out my other sites, and you can see there that we do have premium courses as well. And none of them are free. But that's something you can get as a benefit here from ATFX, because ATFX is paying the bill. Okay, guys, we're going to wrap things up, and I'll see you guys on Monday for the next market update. Thanks so much, and have a good day. Bye-bye.